Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Thursday. Welcome to today's pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick. We are still in the thicket of earnings season here. We got Moderna, we got Roku, we got Uber, we got EA. We will try to cover as many of them as we can. We're going to talk Robinhood, of course, as well. Our guest today is Marc Chaikin. He will join the show at 8:15. And Peter Tuchman, I hope, will be on at 9 from Wall Street Global Trading Academy from the floor of the New York Stock Exchange. A lot to get to today. As I mentioned, go ahead and do me a solid. Take 1 second out of your day and smash that like button, please. And thank you. I have a fancy new graphic that with regards to the likes, and I can't find it now. Forget it. Oh, there it is. There we go. Smash that like button. Thank you very much. Don't forget, link in description to the pre-market prep Saturday special, 3 hours. Link in description. Check it out there. Joel, Dennis, good morning. How are we doing in this pre-market session?
We're doing well. I'm going to call you Chipper because you're always so happy then, happy this. So you put me in a good mood. We're up 1050. Man, technical Thursday. Held the close off that 6 p.m. open, and we got a little stall at the intraday high from yesterday at 08 and a quarter, 08.75 high. Jobs number tomorrow. So just keep an eye on that. So we'll see if people jockey position ahead of the jobs number. Crude, it was a buck higher, but now it's down 18 cents to 67.99. Gold gave all those gains back from yesterday. That's up $1.60, 18.1610. Silver just hanging out in the middle 25 handle, up 8 cents at 25.54. Bitcoin, that's in the red by $1,800. These are the futures at 38,000 even. Not seeing a reason for that. Ethereum down $81.75 at 2,619. Triple D, I imagine you didn't have a lot of action. Well, maybe with the earnings you had some action last night, but what caught your eye? I know there was a couple different things you have on your mind.
A lot of things catching my eye. There was a lot of action last night.
Okay. All right. I'm just looking at the futures were a little tight, but
the futures have been tight for a long time. I mean, if you're sitting here and you're a futures trader, you're bored because, and we saw it with the Virtue report yesterday. Ooh. I mean, trading volumes in the last quarter were lighter and VIRT was going down because of it. So,
you still got it?
No, I sold it. I sold it actually ahead of the report. You know why I sold it? Was I just bought it like a week and a half ago, and I was swimming, and then I looked and I was like, that was a kind of a slow quarter. It was a slow quarter for volume. It was a slow quarter for my own personal trading. And I was like, you know what? They usually track pretty closely to like what I'm doing. Not that I'm doing the same thing, but they would probably have some strategy overlap. But when volumes are lower, volatility is lower, I make less money because I'm doing a lot of inefficiency trading, and they're all inefficiency trading. So, market making. So volumes later, I kind of thought that they might actually not do well in the quarter. So I actually did sell it, but I do intend to rebuy it. I still like the company. I like the company a lot. It bounced. I'm going to wait for a day, but I'm just basically scalping. Like I bought it and sold it pretty much at the same price. And I didn't realize it was reporting. I bought it about a week and a half ago. I was like, oh, I forgot they were reporting. And I was looking. I really analyzed it. And then so I dumped it right the day before the report because I didn't want to take it through the report. So, but I'm going to rebuy it. I still like the company.
Okay.
But anyways, you look at that and, it has been lighter volume here. It has been quiet in the futures. VIX has come down, significantly from where we were. We're at 17. Obviously, a few months ago, we were up over 30. So it's quiet. It's quiet. But there's individual moves that are crazy. And I mean, we've talked, and maybe we should start with HOOD because it is the stock that everybody is talking about continuously here. What a move yesterday. I mean, it broke out and Kramer was talking 60 and I was like, well, I don't know if it's going to 60. It didn't go 60. It went to 85. So, I mean, this is just an insane move. FOMO just takes over with people. And obviously, that's, congratulations to people who were long it before. But if you're buying a stock that doubles in one day and you're buying it up 100%, holy mackerel, you're buying somebody else's profits. Anybody who was selling Hood yesterday when it was limit up multiple times right in the early morning, congratulations, great call. Stocks come back down here now. We have a headline overnight here, Spencer. Give us the details.
Yeah, before I get to that, what if you bought and sold Hood yesterday? Then what? Then what are you?
Hope you bought it right. Hope you didn't buy at 85
Spencer
and sell
did.
at 60.
Spencer did. Could Spencer? We should have.
Are you a day trader in Hood?
Yeah.
What'd you do, Spencer?
Can we have a music or something on this?
What? Do we have a soundbite that maybe that? I don't know.
What was that?
What'd you do? Tell us about your trade.
A little quiet. Don't make it louder. What did I do? At like
FOMO.
Yeah, basically FOMO. Yeah, it was a stressful 4 minutes for me. Whatever.
4 minutes? You're a day trader now. What did you do? I'm so
excited.
Here,
I'm pulling up my account because I don't actually. I want to be accurate with like the timing and all that stuff. So
sure.
At 9. There we go. At 9:33, so it was at $61. Bought there and sold it right after the first halt. Right before the second halt at 9:40 at $71.
Nice. 10 points, basically.
10 in what?
You like this day trading stuff? 10 points in less than 10 minutes. You're better than me. I tell you, I haven't had a 10-point trade 10 minutes in a long time.
Yes,
nice trade, Spencer.
Thank you.
I like it when somebody says, look at Dennis smile. I like it when Spencer makes money trading more than when I make money trading, believe it or not, because it's exciting. We love Spencer Israel.
But honestly, I was talking about this with Joel yesterday, but I was a market in, market out type of situation. So I basically had no plan. It was a chaotic 6 minutes in my head.
You're playing the Momo. You were in there, and you got out in time. You got out while the circus was in town.
Well,
sell the peanuts. You sold your peanuts while the circus.
As soon as we got the first halt, I was like, oh shoot.
Halts are a little bit nervous, especially when they're going the other
halts
way.
Are never
right. So I was like, okay, I don't want any part of any more halts for now. So I was like, as soon as we opened, I was done market order. So so whatever I get, and so
nice trade, Spencer.
So it was FOMO, but it was fun. It was a fun few minutes, that's for sure.
You know what? You did you give are you done yet, Spencer?
I'm done.
I got a story here that I never told.
Oh no!
This is a good one.
Okay.
You will like this one.
Okay.
It's kind of floor related, but it's not. And if everyone thinks I'm old already, you're gonna
we love it when Joel dates himself.
This is really old. Okay, this is in 1987. Okay, when during the crash, they basically came down and said, unless you have like $100,000 or $250,000 in your account, you can't trade on the floor, right? So I didn't quite have that much money in my account. And so I was upstairs trading, and things were absolutely crazy. And the market was just crashing. And this one guy, and I remember his whole name, but I'm not going to give it. Okay. And he was sitting there, and he's watching the market go down. And he's like, "Oh my God, I got to get short. I don't know where to get short." And he goes, so he picks up the phone. He had to call on the order, and he goes, "Sell one. Market." And then the person hung up the phone on him, like, "You want me to sell a one lot?" And then he waits about 15 seconds. He goes, "I shouldn't have done that." And he picks up the phone. He goes, "Buy one." Okay. It took him like 2.5 hours to get the fill.
Oh,
and he
wow.
ended up, they're like a one lot in the crash. They're like, "You're selling one at the market, buying one at the market."
Yeah, we're not taking your odd lot trades here, basically, right now. We're not worried about that. Where'd they execute them?
I think he scratched
sold at the low, bought at the high. No, they
or lost money or something.
2.5 hour confirm in a crash. That's why.
You know what? Yeah, like the people on the floor, they probably just never, and also when things like that, the paper just stacks up on, because everything was an automated paper trail. So, all of a sudden when things slow down, you just have all this paper in front of you with all this handwriting that you can't read.
Yeah.
And so I remember Steve doing that trade. So when Spencer,
that was me yesterday.
You're right in the flying, that stock's flying high.
My odd
buy
lot,
one.
my odd lot.
Buy one.
But if you are curious, you can watch this whole thing kind of play out because I did it on the stream. Yeah.
Oh, nice.
9:35 yesterday.
Live trading with Spencer Israel. That could be a segment.
Yeah, on our show after this, that we do live trading with Benzinga. Anyway, so the overnight news that Dennis was referring to on Hood was this offering, the selling shareholders. There is some shareholder out there that has decided they want to sell 98 million shares of Robinhood. My suspicion, and I have no information, this is just what I think, is I think some institution, some pension fund, whatever, saw yesterday. They were like, oh my God, I did not sign up. I'm sorry, oh my gosh. I should say, oh my gosh, I did not sign up for this. Get me out. I want out. I want out.
I think they want to ring the register.
Okay.
I'd want to ring the register too. It's like, boom, $85. Get me out. Let's ring. Cha-ching, cha-ching.
Yeah.
So it's down. You know what? I heard the offering and I was like, wow, Vlad is smart. And then it was like by selling shareholders. And I'm like, no. I'm like, Robinhood, if it's going to pop up like this, sell some stock for the shareholder. Like sell some stock for the company. So raise some cash at, these higher prices there. That's what I was hoping he would do. But this is for selling shareholders. So just to clarify, that means the company is not getting the money for these shares. This is somebody that wants out. So this is for an individual. So this isn't even a good offering. This isn't one you want to see. You never want to, they're never, when you got selling shareholders that want out, there's no way to spin that as a good thing. So, I mean, we've looked at, different situations where stock is rallying high and they want to sell stock to raise money to do better things with that at a really high inflated price. Those are better reasons to have an offering. So, stock down, it's down $6. I mean, this is a wild child. I would look at yesterday's low as the first area of major support. It's how we did it 4 days ago. Look at the daily bars. I mean, you can look at all the intraday stuff, but really you got $54. I would imagine if it gets really silly and it wants to come way down, I would imagine that 54, 55 area finds some buyers. I don't know if it's going to get down there, but falling $9 when a stock's moving around 80% in a day from the previous candle, it's possible. So if I was looking to buy it, that's probably the first level I would look at. I'm not looking to buy it. In all likelihood, I won't even make a trade in it. I did make one trade in it yesterday, too. It wasn't nearly as good as yours, Spencer Israel. I think I made 14 cents. I got in it.
How did you only?
I got in it, and I had immediate buyer's remorse because I couldn't get a locate, so I came and shorted. I had immediate buyer's remorse. I'm like, I'm turning around selling this. I was in it for like 10 seconds. I was like, what am I doing? Stop trading this stuff. So you leave it on your screen long enough, you look at it, you want to make a trade in it. So better not to even look at it. But
if you guys want, I will do like a 3-hour course if you want to attend about how to make $10 on every trade.
That would be amazing. I would actually sign up. We're going to add you to our curriculum there for.
Well,
not this time because I'll be at a wedding, but next time.
You know what? Just real quick, I know we got to bring Marc on, but I got to. Someone tweeted at me yesterday about why do I mention daily highs and lows so much, and then also look at the weekly and the monthly. And Dennis, you just mentioned it there. I mean, it's no secret sauce. It's just, two lows in the same area or two highs in the same area, give you an indication that someone bigger is doing something. And then when they coincide with the weekly and the monthlies and things just kind of all line up, it all comes from the dailies, but weekly data is made up of daily data, and monthly data is made up of daily data. So it was a good question. I don't know if I explained it right on Twitter, but if you're short term, long term, whatever, that's a great example in Hood when it made that double bottom there. Technically, $60 is the pre-market low. That's all I have to say about that. Trade at your own discretion. Spencer will be
wild child.
Yeah. I mean, the halts. I mean, come on. That's just that. I don't even know. That's just like a blank check, right? Because it went to 8. What if you bought it like $84.99? It gets halts at 85. You think it's opening up at 100? I don't know. I mean,
and the worst part of all this is it got halted, and my first thought was, oh, I did not see this coming.
Is there one person that's selling this, or is there a group of people selling this? It's got to be a
They
group.
selling shareholders or selling shareholder?
It looks like
Well,
Selling
insiders.
shareholders, 98 mil
Yeah,
by
that's
selling shareholders.
well, but for all we
Wait.
know, it's one person representing.
Maybe it's Vlad. It's a joke.
No.
I don't think it's Vlad.
it'd be interesting to find out who it is.
I don't think we'll ever know. But
Sometimes you find out from the street, but for the most part, you sometimes never find out.
You don't.
yeah. Anyway, all right. Let's bring Marc Chaikin on here from Chaikin Analytics, longtime veteran of these markets. Marc, good morning. What's up, man? How we doing?
Good morning. Animal spirits. Amazing.
Animal spirits. Exactly right. Exactly. We're just here for the show. What's on your radar here? What are you watching?
I'm watching the 10-year down under 120.
Wow.
And that's driving large cap tech again. NVIDIA.
Yep.
I love NVIDIA here. Have for about 3 weeks. And Rosenblatt just raised their price target to 250 from 200. So that gives everybody some cloud cover. And there you go.
You look at the move in AMD, and it's been just a crazy breakout. And you think the Johnny catch-up trade's probably going to be, even though Nvidia has been the leader for a long time. Nvidia hasn't really had a move here to like the AMD here in the last week and a half. So I kind of like your trade as well, just as a sympathy trade. I think if Nvidia can take out those highs from last month back at 208. We could start to see, the stock start to really, go to. Obviously, AMD was a beneficiary of a lot of talk on Reddit, but I mean, Nvidia sits there. It's still probably best of breed. I kind of like it here too.
Yeah, and I think the stock has typically traded up to price targets. Way back when, before the split, maybe 9 months ago, Bank of America had some crazy number and it never got there, but it got there eventually. So I think these things are like magnets. It, as I said, gives people cover to buy the stock, and just a beautiful, beautiful stock gets above 210 and it's off and running.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins the show every Tuesday, or excuse me, every other Thursday to share his fundamental and technical thoughts on the market. We got something from Cam Carson here, and I want to address it with you. And it's just talking about volatility. And he says it's an old question, but he thinks that 99% of the traditional asset management world still doesn't understand or pay attention to volatility as an asset class. Blows my mind. If you're not paying attention to vol, you're ignoring 50% of the market. What's your take on that, Marc?
Well, it depends whether you're talking about VIX or you're talking about intraday volatility, but 99% of the active managers don't influence the market anymore. It's all index funds and high frequency trading and some sort of algorithmic quantitative, and they're paying attention to volatility. So, I mean, the simplest way to look at volatility is when volatility is low, equity exposures go up because people use more leverage in these trillions of dollars of quantitative strategies. And when volatility goes up, they pull in the reins and reduce their exposure. I think Dennis knows about that. And, beyond that, for the average trader to look at volatility, I think it's going to drive you crazy. Look at the technical price patterns. I'd rather look at double tops and double bottoms like you just talked about than try and game the volatility trade.
So, Marc, it's been such an interesting earnings season. A lot of companies reporting and beating, but the expectations may be too high because some of these companies not responding well to the earnings beats. I'm torn on this market because you got the indices, sitting, very near highs, like the SPY, QQQ, very near all-time highs, QQQ touching all-time high almost today. IWM off a little bit, though. So, the small caps have not participated nearly as well as some of the mega caps. Do you think eventually we go back to the small cap market, or is this the time where, FANG's going to drive the bus?
I think eventually you go back there, but only when interest rates start going up. It's really tough for small caps to rally in an interest rate environment that's as weak as we're seeing right now, strong bond market weak. 10-year yield. But I do think that the earnings season is interesting for a couple of other reasons. You've got companies like Clorox, which had a bearish rating in our power gauge quantitative model, that basically flamed out and dropped dramatically. You've got companies talking about raising prices because material costs are going up. And then you've got companies like Etsy that are showing that, the online marketplace is not a monolithic. You've got the Amazons of the world, and then you've got some specialized retailers that aren't doing as well. And then you have Roku, telling you that streaming volume is off, and even though the numbers were great, disappointing based on expectations. So it's a market that to me spells choppy into the end of the summer, and then possibly some weakness in September, very seasonal patterns. But as long as interest rates stay where they are and the big cap tech stocks report the way they've been reporting, you're going to see the major indices continue to make new highs.
Choppiness and making new highs. Where have I heard that before?
Jobs number, Mark. Jobs number. Isn't going to mean anything, do anything? What do you think?
We're in a Goldilocks market. If the numbers come in strong, the economy's doing better. If the numbers come in weak, the Fed's not going to taper as soon and won't raise rates. So that's, we are in the dog days of summer, but I don't think the employment numbers matter much, except that, maybe you've got a number that's such a big outlier. You already had the ADP number, and it didn't spook the market. We're back up today after some selling yesterday, in theory, based on that number. I do think we're in a Goldilocks environment right now, since so much attention is being focused on the Fed and whether they're going to taper or when they're going to start raising rates. So there's all this chatter this morning about 2023, and Clarita says this and someone says that. It's a good market if you're on the right horse. If you're backing the wrong horse, it's not a great market.
That's so true. I mean, this has been, some people, say that stock pickers market. What is a stock pickers market? We are in a stock pickers market because there's a lot of stocks that I tell you aren't very near all-time highs. A lot of stocks have been getting hit. And then there's other stocks that just for whatever reason continue to defy gravity, continue to go higher. I mean, it's tricky. I mean, if we look back to January, I was looking at my portfolio, it's like everything was going up. But now you're in this mixed market, and some stocks are going up and some stocks are going down. We got reopening trades one day, then the next day the stay-at-home stocks are back in favor. How do you keep it all straight?
Technical analysis. I mean,
not charts.
It's not that hard. Well, it is hard, but I just think if you look at some group relative strength, so software had been weak, and then it really turned strong about 4 or 5 weeks ago. Semiconductors are strong. If you start with group relative strength, you tend to point yourself in the right direction. So that's where I came to the NVIDIA trade about 3 weeks ago. It pointed me to Oracle on a dip here last week, which has now come back up toward the old highs. And so I think if you use group relative strength, you're going to point yourself in the right direction. Then it's just a question of finding the best stocks like an AMD or an NVIDIA or an Oracle right here.
Are there, aside from NVIDIA or semis or whatever tech stocks, are there any reopenings that you do like?
Tough to like reopening trades here, and until the market tells you you're right. I mean, you could bottom fish in what? The travel trades getting hit bad today because of fears about a COVID, not lockdown, but COVID restrictions. Hard to like the reopening trades here. And you've got the big banks like JP Morgan and Morgan Stanley saying, no, they'll come back, they'll be back in favor. But it's tough to find the names where you want to buck the trend. And one place I would definitely be looking, and unfortunately, if you're averse to buying new highs, are the cybersecurity stocks. We've talked so many times about Fortinet and some of the other cybersecurity stocks. Fortinet's had a bullish power gauge rating going back to December, but even there, look at the earnings reaction there. You got a big steep sell-off on earnings. It absolutely meant nothing, and the stock then powers ahead and beats the old high by about 15%. So I think you just got to look for opportunities in cybersecurity, software, semiconductors, and avoid bottom fishing in the reopening trade.
Yeah. You know what, Mark? You've been consistent on that for a while now. So can't fault you for always changing your mind, because when you get convicted, you stay convicted. So we appreciate that. Marc Chaikin is the founder of Chaikin Analytics, chaikinanalytics.com. That's where the power gauge is at that Marc is always referring to. Marc, have a good rest of your week. We'll talk to you in a couple.
You bet.
All right.
Enjoy.
8:26. Let's do some earnings, everyone.
Let's do some stocks.
Let's do some earnings. Let's
this morning.
Let's start with Moderna. Let's start with Moderna here.
Sure.
Okay, this was a report, and it was out, and the numbers. I mean, the numbers are what they are. It was out this morning. The EPS beat, sales beat. Don't know how relevant those numbers are compared to what they have in the pipeline. To my eyes, the press release seemed pretty much all good. They talked about where they are in various trials. Their HIV vaccine is slated for a phase 1 study, or they have 2 candidates for that, slated for a phase 1 study by the end of this year, at least to start the study. At least they have a Zika vaccine in the works. Of course, they talked about how many doses of the COVID vaccine they delivered last quarter, which I guess was a smidge light, but whatever. Anyway, to me, this company, like if another one of these vaccines hit, then this company to me seems like incredible.
It is an incredible company. There's no doubt about it. I mean, in the stock, obviously performance, I guess you're buying quality. We go back to a year ago, it was $20 stock. It's a $400 stock. Obviously, the biggest beneficiary from COVID was Moderna out of probably any stock that's out there. Easily. Sure. And you know what? They've just done everything right. And, it's a company that's firing all cylinders. They've done it all right. I've missed the boat on this one. I thought when we were getting past COVID back, it looked like in May or June that the stock would start leaking. But you know what? The last couple of weeks with the Delta variant, and we've been talking about this trade. We've been talking about it, that there's, the stocks that, you've seen the stay-at-home stocks, running up with Delta out there. You've seen the reopening stocks get hit. Well, this is the ultimate Delta play. As Delta goes up, this stock goes up. So as the cases go up, Moderna goes up. And they're doing so many other things right too. It's been a great company and it's been a great stock. I've missed the boat on this one.
$17 off the pre-market low. That's a bounce. 390 pre-market low. So at least this indication's telling me is you still got buyers out there. So if you go back towards that area, I think you'd have to pick a level ahead. I'm going to give a whole range. Yesterday's low, 377.11 to 390 buy zone. If you do take out that pre-market low, be interesting to see what happens at the close. We're not that far away from that. 419.05 all-time closing high. So, if you're looking to get out of the mark, and then 433 is the all-time high in MRNA.
Let's look at, oh man, I don't even know where to go now. We can look at Uber. Let's do Uber and Roku here. So we had a Lyft Tuesday. We had Uber yesterday. The Uber report was very similar. They talked just like Lyft about, EBITDA profitability sooner than expected, and come back in drivers, in active users, the whole 9 yards. The numbers are not really comparable. I guess the sales are comparable. The sales came in higher than expected. Gross bookings higher than expected as well. Anyway, Uber, it's fitting in with the theme what we've been talking about, right? It is a reopening play, so that's all you need to know for now.
At a certain point, Uber is going to be a buy. At a certain point, it's going to be a buy. And maybe that point is today. Maybe you got all the bad news out from Lyft. Obviously we got the reopening trade that has just hit this stock hard. Again, this theme, even though people don't want to hear it, the Delta is controlling the stocks to a certain extent. And Uber in the last month has been hit because of Delta. And, I think at a certain point we are going to get past Delta. I do think there's going to be some buys in the reopening stocks. This one does have growth. I still believe in Uber. I still think it's best to breed. I still want to own this stock. I don't own it, but I want to own it. So I tried to make a swing trade on it at like the 44, 45. It took out and made a new low. When the stock's making new lows, you got to go. And that's what I did. And I took my loss. Obviously got earnings. It's knocking it down here again. I don't want to be a hero and call the bottom here, but I want to own the stock. So give me a level, Joel, where I should come into Uber, because this is one stock that I do want to own.
Well, this got punished for Lyft. It got punished on its own. So I mean, it a little overdone. The overreaction in the pre-market took this thing down to 37.90, but it doesn't feel once again that it's going back down there. If you look at long term, Dennis, maybe a nice round number like 40. You're there. I mean, if you want to hold out for the next monthly low, that doesn't come in until closer to 34.06. So maybe try at 40. If it can't put in like one or two lows in the same area, then you're out, and maybe try and reload at 35. But I think it got a little overdone, and I don't even think you're going to see that pre-market low today at 37.90.
I don't think so either. I kind of want to buy it today. I kind of do. And but I haven't bought it. I kind of want to buy it, and then I'm like, I'm catching the fallen knife. I've got the delta. There's a lot of reasons not to buy this, but just because I'm so underexposed to all these reopening stocks now, I kind of want to start getting on. And this one, I still think is a great.
Yeah, but why does it have to be Uber? Like,
what stock do you want to give me?
Well, why does it have to be one that still has never been profitable, and we don't even know if the business model really works?
Growth. I like Airbnb too. Similar. I think Uber and Airbnb are game changers for their respective industries. I mean, Uber's, like you said, taxis. I think they're game changing stocks. So they're not cheap. These aren't value trades for sure. But I mean, we've seen this market where fundamental analysis has really not got you that far. I mean, you can check out Regeneron too here. I own Regeneron. And it had a fantastic report here. I mean, unbelievable report. REGN, bring up this report. I just want to give this argument where, fundamentals have been tough to just go on fundamental analysis and say, I'm going to buy this because the stock's cheap. REGN reports $25.80, Joel, beating the estimates of $17.69. They absolutely blew it away. Sales $5.14 billion versus $3.89 billion. The stock is trading 5 or 6 times earnings if you're projecting that out. And I'm not sure, maybe it's a great environment, maybe it's not going to continue, but it's like cheap. But it's like, okay, the stock's up $13 on that blowout. And you say, oh, $13, only 2% though. So I would have thought that would have got a lot more. I'm long this stock. I want to stay long it, but I don't know what, and the reason I was on Regeneron is I also like, the possibilities of, it benefits obviously from increases in Delta cases, because I think some of the therapies are going to, help a lot of people. And I think that Regeneron is doing a lot of good things. But just bring it back to the original conversation is, cheap stocks, if you're investing on just fundamentals alone, it's been tough because there's some stocks that just defy gravity, and I've learned the hard way with Tesla, where, I've been a hardcore Ford and GM fan, and GM, had a great quarter. It didn't matter, because expectations were too high, and, and fundamentals, you look at this fundamental analysis and GM trades 8 or 9 times earnings, maybe 10 times earnings, and got Tesla at whatever, 100 times earnings. It's so tough. And not saying you got to redefine it all, but I think you've got to have some growth names, some secular growth names in your portfolio as well. And I think Uber's a great company, and I like Uber better than Lyft. I think it's got the name. And I do think Uber and Airbnb, even though the valuations are quite high, I think they continue to grow into those valuations. So it's a company I've always wanted to own. It's come off significantly here. I'm wondering if you just threw Uber in your long-term portfolio at $40 and looked at it 2 years from now, I think you'd maybe be happy. What are your thoughts, Joel?
I think,
Spencer?
Yeah. I mean, someone just mentioned about a lockdown would absolutely kill the stock. I mean,
but we already had that.
I know.
I don't. The case.
Yeah, nothing happens the same. If we do get, it's just
we're not going back to 20.
No,
it's not going like
so
COVID. Delta isn't going to be like COVID was in March of 2020.
No, I don't think so either.
I don't think so either. I think eventually we are going to find a way past this. I hope. You got companies like Moderna that, they're very smart, and what they've done is nothing short of amazing in the last year. And, obviously shareholders have rewarded the stock for that, rightfully so. But I mean, you look at a stock like Uber, I don't think Delta's going to crash us down to $30 here on this. They have the Uber Eats, and that helps too. I mean, it's down from $63, $64. I mean, yeah, it's still not cheap from a valuation perspective, but, it hasn't been cheap for a valuation perspective ever. I just think it's a good company that eventually is going to benefit from when we actually do get past all this.
Tough monthly candle here between, you had this move from 35 to 50 in November of last year. I have time to do it. Maybe I could do it after 9 o'clock. Find some daily lows in that area, maybe 2 or 3 or 4 daily lows in that area, and give you something to lean on. But a lot of times, and how many times have you seen this? A stock gets pummeled off its earnings, whatever happens. First of all, I'll give a couple examples. Tesla, they this low right here, I believe, was on earnings day. And look what it did. Turned around, made an earnings day low, EDL, shot out of a cannon. Oracle, right? They reported, they're a late reporter. Look at that. Gap down, took a couple day, match that low, earnings day low. So very, watch it today. You don't necessarily have to buy it at 40, but market like this was the earnings day. This is the way things reacted. And then you can get it, because this has been punished for lift. It's been punished on its own. It's punished as part of a reopening trade. Eventually there's got to be some, good news coming.
That's what I'm saying. Is this all the bad news? And eventually in this, there's people saying, and Delta is serious. I'm not, discounting that. We're not going to get an increase in cases. And the news flow, this is why I haven't owned any reopening stocks. I do believe that the news flow for Delta is going to get worse in the near term before it gets better. But it's a lot. These reopening stocks have been punished pretty hard. And I think Uber is a reopening play too, and I don't think anybody would deny that. So I don't know. I kind of like it here at 40.
The challenge now becomes, because last time around everything went up regardless, every reopen, and I wonder if it's going to be as equitable this time around, right?
I think an Uber will lead. I think you're going to see a company like Uber with growth lead the way. I think you're going to see a company like Airbnb. And Airbnb already started turning around here. And Airbnb is a tough one, because is it a reopening trade? But is it kind of a stay-at-home stock too? For the simple reason is that it's an alternative to hotels.
There you go.
Airbnb is a good one too. Again, I like Airbnb. I had it in the portfolio for a while, and then I sold it out when it started breaking down. I don't like them when they start breaking down. But you're back up here in a resistance. I'm not getting Airbnb. You're buying that right into resistance at 150. It's a huge wall of resistance there. So I more like to buy the dip. There's been a nice dip on Uber. There hasn't been no dip on Airbnb here in the last week and a half.
Look at Marriott. I just can't believe this thing's not too far off the all-time high.
No, I know those are. I don't understand those at all.
I don't understand those at all. But I'll just say, and I know the value just from my experience over the weekend. These big hotels. They're hard to manage. We were in a Westin, and there was no maid service. They can't find people to work. People are, worried, the going in the rooms to work. I just think these small, just like I'm a big believer in smaller airplanes, eventually that's why I'm not looking at any of these big, the Delta and American. I just think like an Airbnb, when the one we stayed in down in Florida, it was like 8 units. Manageable, someone bought a property, redid it, everything was brand spanking new, except they didn't have cable. Oh, is that the bat phone there, Dennis?
I think so.
And
iPhone 5.
Yeah. What'd you say?
That's the 5. I'm still on the 5.
You guys are
upgrade.
Worse with updates. Wait, Joel, finish that thought, and then I have something to say.
I just think I like it. I just the whole concept, the big hotel concept. Yeah. I think there's fundamental shifts that are going to happen from COVID. They're going to be in 5, 10, 15, 20 years. And I think
Airbnb is the fundamental. And
I think
it isn't going away.
It ain't going away. I think it's smaller airplanes and
their margins
hotels.
Are huge. Easier. Like I love the Airbnb. Just the valuation. I can't wrap my head.
Go ahead, Spence.
Okay, mea culpa a little bit on the Robinhood thing. If I had taken an extra 5 seconds and gone to look at the filing, I would have seen, oh, wait a minute, it tells you who's selling. So, variety of pre-IPO and a lot of venture investors. Andreessen Horowitz is selling 9 million shares. You've got a bunch of venture firms. Sigma River Holdings.
They're all ringing the register.
Yeah, just a bunch of, and I don't know who's behind these people, right? For all we know, but I'm just saying it looks like it's mostly VCs is behind this. So a lot of VCs are ringing the register. So Earlier we said we didn't know. Now we do know. We just didn't look at the filing. And
Since we're talking about Robinhood, I just have to share this from you, and this just warms my heart. Alan Moore says, "Thank you guys. This trade was 16 months of watching pre-market prep and putting it into action." Okay, this is
on Twitter.
This is on Twitter, and let me see if I can.
Yeah, he had a big trade. Looks like 10 points off of. Look, Spencer Israel makes 10 points. Alan makes 10 points on options on Robinhood too. Congratulations, Alan.
Nice, very nice job. Very nice job.
He actually did. He did. Yeah. Nice job. Yeah, nice job. And and even after the trade was over, it was hard to see it there. But check it out. It's Alan Miller. Online autograph you can see on our Twitter feed. But even though the trade was a good trade and everything, he looked at what he could have done better. And I think that's one thing that we try and stress is, analyze your trading, analyze what you
try
did.
To get better.
Even when you're right and you do really well on a trade, recognize and learn from it. So I just wanted to mention that. Congratulations, Alan. We did have some economic data. Who cares, right?
Well, we have jobless claims, which is
big number tomorrow.
Right. That's the whole thing about these economic numbers is they're only really good within the context of other numbers. Like they're only really relevant within the context of other numbers.
All numbers, isn't it? It's
right.
all relative.
Sure. Right. So like by itself, it means nothing. So like the ADP number that was soft the other day, is valuable in context of jobless claims, which is valuable in context of tomorrow's number, and they all sort of, So,
now the jobs number isn't even meaning anything because I liked what Marc said. If it's a strong number, this economy's ripping. If it's a weak number, then rates aren't going up. I mean, it's true. It actually, when we had Bob on Bob Bright on At the Close show, and this was a while ago, it was like the roaring 20s. It's like everything is good news, and I like Marc's interpretation of the reaction to the jobs number.
Okay, let's take a break from earnings for a second. We'll come back to it though because I want to get on Roku and I want to get on EA, but I feel like a broken record with these things. So let's just take a break and let's talk about Penn for a second.
That had earnings too.
All right, but that's not why I want to talk about it because if you look at the chart, I didn't see this till just now. Complete reversal this morning in Penn National. You're right; they did have earnings. I'll be honest, I didn't see what the numbers are. Look, they beat. Shocker. Anyway,
it was a good report, but they're buying the score. That's
why
the stock is down.
Ticker SCR is your number one gainer this morning because it's being bought for $17 a share in cash plus a ratio of 0.2398. I'll say it again, 0.2398 shares.
Wrote it down for U.S. guards.
Penn. It's a stock and cash deal. Brings it to a total value of $34 a share. Where is SCR trading? It was at 31 now.
It's up 63%.
It's at 29. Anyway, so Penn just reversed this morning, which I just noticed. This is a very interesting transaction for a couple of reasons. I've been following the score for years.
Yeah.
But I'll be honest with you, I'm not a big sports bettor, so I didn't really realize how big they had become in Canada on the sports betting front. I guess that's the business now. So congrats to them for a successful pivot and successful acquisition. And I saw a tweet this morning just about this stock, and it was from Julian Klimachko, I think, who's a big SPAC guy, and he was like, years ago, I was in this stock and I watched it do nothing for 5 years, and that was the hardest part. Well, if you watch this thing do nothing for 6 years now, you got rewarded. Congratulations. If you had the ability to wait that long, it is not easy. But this is a very interesting transaction for a number of reasons.
It's an interesting transaction too. Dave Portnoy is a big shareholder in the score. At least he was. He's been talking about the stock for the last year. So it's interesting because obviously Dave Portnoy is very involved with Penn Gaming as well. So that's just interesting in itself. I'm not going to go any further than that.
Okay.
But, Penn Gaming getting hit here on it. Typically, when you have a company acquiring, they're paying a big premium. Full disclosure, I still have that small position in Penn. I kept a small position way back, and that's obviously been a dog. I bought it back at 76. It's now 64. So I'm a bag holder now in Penn Gaming. It's getting hit harder here today. They're paying the big premium here. I don't know what to say. I'm not going to say anymore on this.
I'm not going
to. I'll just on this.
Oh wait, one more thing before you go. Mitch, credit to you. You mentioned this on your stream.
Yeah, big props to Mitch.
Monday, like Mitch has been on the seasonality thing for a while here. He thinks with football coming back in a couple of weeks, then you're going to get seasonality in all the sports betting plays. So we called this one out. I mean, I don't think he saw a takeover coming, but congratulations nonetheless. You called it out on Monday, and you're being rewarded here today. So nice job.
Two quick notes on this. One, to that person, I don't know who it was that tweeted at me about talking about daily highs and lows and the emphasis of it. One daily high and low really, doesn't mean much. But when you put 1, 2, 3, 4, 5, 6, 7, 8 in at the same area, that's telling you there's some selling going on there. And you had the one fake out day where you took out the 73. One number on the downside, that's all I'm giving. Low of the move, 63.15, folks.
Big number.
That's it. That's it. It's the only number I'm giving.
It's a big number. It's going to get some press. I mean, it's a big takeover. Congratulations to Score shareholders. It's a big windfall for them.
Yeah, very interesting. Very interesting maneuver. A lot of M&A happening in the sports betting space at the moment. Penn seems to be positioning itself to be one of the biggest, if not.
They're trying to get involved in Canada,
if not the biggest fish. So you've got Penn, you got Caesars, you got MGM. It's a race. It's just a race for market share right now, and the race is on. Okay, let's talk about another big gainer this morning, and that is Datadog. Let's go back to the earnings here. Datadog is number 6 or 7 on my filter list this morning. EPS beat, sales beat, guidance well above estimates. Not well above, but above. Earning guidance for the quarter was good. Guidance for the year was good. Everything was good from this report. All the headline numbers beat estimates.
I heard a scream this morning, and it came out of Arizona, and it was Sean Udall.
Is he in this one?
He talked about this thing when it was ugly, Dennis. When I think maybe in June when it was trading at 65, 70, it was, I don't know how many, and then it had a bad report. Maybe it was right in here. I'd love to go back to the archives and see where it was. Not much to say about this one. Blasting a new all-time high. Expect if you get through 132.50, which is not far away from here, I expect more upside. It's the only number I can give you. Seems to be holding 130 as support. If you're going to get me to buy this at 130, then you're talking to the wrong person. But 130, 132.50, that looks like where the paper is in D-Dog after the big beat.
Earnings season's so hard to trade. I mean, there are some stocks that beat and raise and pop, and then there's other stocks that beat and raise and drop. I mean, it's all about expectations coming in, but a little bit of random walk theory here because you're getting some tech stocks that actually reported pretty good quarters, and they get hit. And then you're getting other tech stocks report pretty good quarters and they get jacked up. So it's tricky, man. The interpretation on these things, it's tricky to trade.
Did Kathy, was this one, did she load it up on? I can't remember. We don't even talk about Kathy anymore. But anyway.
Well, she was buying a lot of Hood. I'll tell you, she made some money in Hood.
And I made a lunch off of that because I bet Aaron Bree that she would buy Hood. And I got myself a nice Potbelly sandwich. So thank you, Aaron Bree.
Where is Potbelly?
PB.
$7.
It doesn't move.
They had earnings this morning. For whatever.
Oh, everything had earnings.
Oh, look at that.
Yeah.
That was a random stock we talked about. Had earnings.
Yeah, PB.
It's a big earnings day win.
Dennis, if we could get together socially and I could take you out for all the lunches I owe you at Potbelly's at 12 Mile and Telegraph, this thing would be, well, now there's one downtown too.
If I could ever cross the border.
Yeah, you ever coming back to the...
I got my vaccine now, so maybe eventually
what's going on with that? Are they letting you guys over?
I think so. Yet? I think they are. I think they're opening up the borders. So.
Yeah, I mean, I think I'll never see Dennis again. Joel, I've seen you twice in the last year and a half, which is 2 more than I thought.
I'm planning on coming soon. I just...
Okay.
I don't know when.
Okay, that's fine. 8:50 here. Let's do some tickers from the chat. Earlier in the hour, Matt had dropped SoFi and Under Armour on us here. SoFi was moving yesterday with Robinhood. Under Armour is one of the few we talk about like what looks good. Under Armour doesn't look terrible, right? It's one of the few things that is actually gone up and held its
Wow, what a
earnings gain.
move.
I know.
That's the earnings move, eh?
Yeah. There aren't many of these this time around, but Under Armour is holding its earnings gain. So congratulations. Thoughts on UA or UAA?
It's been a big move.
Yeah, no kidding.
I don't buy, like, when I see moves like that, I'm more inclined to sell them than buy them. But I mean, it's been a big move.
Under Armour can never seem to get above like the mid-20s.
You're coming right back into resistance, and you literally blast off like a rocket ship to get there. So I don't know. You're starting to run into trouble here, probably at that high 2182. If you're looking at the UA, there's the UA and the UAA. I trade these against each other, but I don't know. I think you're going to run into trouble a buck higher from here. So if you're coming in now, it's like my risk reward doesn't set up nearly as good as it would have a few days ago. I had the earnings report though.
Boom. So UA, boom. I'm sorry, I lost the touch. LB, oh, there it is. No, that's KB.
UAA.
No, I know, but limited brands. Why is this LB coming up as incorrect symbol?
They changed the symbol.
What did you?
VSCO.
Yeah.
Victoria's
Secret.
Is that today?
They did that?
Spin-off. Come on, guys. You guys got to stay with it. Stay with it.
Yeah.
I
It's
got
been a
you.
few days.
Is there something else involved with this?
Yeah, there's it's two companies now.
Oh gosh.
So
what's the other one?
Bed Bath. It's Bed Bath or Bath. It's Bath and Body Works and Victoria's Secret. So I don't know what the other ticker is. It's BBWI. There we go.
Oh man, do they not want people to trade their stock? What is this? Oh man, because this thing isn't at 120. What did they? I don't know. I'll have to.
You have both, Joel. You own.
I
both.
know. Well,
Okay.
this is, but I probably have. Wow, this is confusing.
Okay. Figure it out.
Go look at your account. You got shares of Bed Bath. And
No,
Body Works
because
now,
if I
Victoria's
log into my long-term account, I'm going to sell everything. So
That's why you don't log in there.
That's why I don't log in.
It's actually a good strategy.
Ching, boom, out, and.
Okay. So do you have thoughts on Under Armour? I mean, we're at resistance.
UA, I don't know. I mean, these things run. I'm not standing in the way of UA. Right? I mean, good day yesterday. Take out yesterday's high. You got two levels to look at. You have the high 2120 and 2183. That's it. Short-term targets. First things first, stay green. Take out the prior day's high.
What about Fastly here? Mixed
I'm getting killed in this.
Mixed earnings last night.
You never sold it?
I kept one little piece. I sold half.
Could you please let me know when you keep a little piece of
I know.
something?
I should get in and out. I always do bad when I do half positions, but I bought this at 41. I let it run all the way to 60. I sold at Summit in the mid 50s, and then had the 64 ridiculous move on the potential takeover. Like there was rumors it was going to get taken over. That was sell day, and it's been straight down ever since. And I've just been watching it slow. You know, these death by 1,000 cuts when you have in the long-term portfolio. It's just like, oh, it goes down $1. Oh, it goes up 50 cents. It goes down another $2. It goes up $1. It's like death by 1,000 cuts. It's like you just don't even pay attention to it. And then you look at it 2 weeks later, like 3 weeks later, it's like, how did I lose $10? I mean, it was no news, just slow leak. And now all of a sudden you get the capitulation. Boom. They drop the hammer. I take my winning trade to a losing trade. Never let that happen. So I should have sold it all. Obviously didn't. Bag holder in this one now too. So getting them. I've got some bad positions on here now. The Penn Gaming, the Fastly. At one point in time, at the beginning of the year, my long-term portfolio had 97 out of 100 winners. Now it's got some losers in there. So even though the market's at all-time highs, my portfolio's got some crappy stocks in there. So Fastly and Penn are two of them. So I'm not buying more today. I mean, sometimes it's nice to buy the dip, and I know there's a lot of people attracted to come in here, but valuation has always been kind of nosebleed on this. This was a trade that I kind of just a swing trade that I timed perfectly, and I let it kind of become a long-term investment. I shouldn't have. So even though I was winning in it, I let it become a long-term investment. Now I'm losing in it. So this goes to what Mitch was saying earlier. It's a kind of environment where you're just buying and holding stocks, you know, unless you're in the right ones like a Moderna. It's been like more of a market where you should take the profits when you got them, because if you don't take them, the market takes them for you.
A swing trade that you struck out on. Well, at least you got out a piece. What the only thing I can say about this is that someone is buying and they want to buy in this area. I don't know if they're going to continue buying. I don't know if they're going to step up to the plate, but someone is saying, hey, I'm going to bring this stock in under 35. And if it probably goes to 30 more, they'll probably even be bigger. If it goes to 33, they'll be even bigger. But if you want to try and look at like this chart, and I've seen this, and I'll just go with the Clorox the other day. Remember when it was just so sleepy down there at 160 and we're looking like, 155. Oh, we're going to be big buyers at 155.
You don't get there.
Yeah, they don't get there. Yeah, they don't get there. So I could give you a monthly level and Fastly, but I would just look, try and look to the right of the chart instead of to the left. And I won't put my hand up for you folks, but like, let's say you open up right here, you open up at 35, you go 34.60 low, and then you come back up through 35. Then I think you could get. I mean, you're gonna get a pop on this thing. It's down 9.70.
No, I wouldn't say that. We haven't had
I think
a pop at all. You'll have a
pop
pop somewhere, but I don't think you necessarily just come 35 and say you're going to get 37. I don't think that's guaranteed at all. This thing has continued to leak. It's continued to leak the entire session.
Yeah, but someone's all right. I mean, it will trade 37 today. I'm not guaranteeing it, but it will trade 37 today.
I don't know if it will or not.
I don't know if it's going to go 31
ugly,
first. It's ugly, but someone's stepping up. Someone is getting a windfall that wanted to buy it at 45 yesterday. They wanted to buy 250,000 shares. They go, you know what? I'm going to wait for the report. And now they're getting a 10-point discount and they're buying their 250,000 shares. That's just a hypothetical scenario. Trade at your own discretion.
I seriously know nothing about this Fastly. I screwed this trade all up. I had it perfectly. I was up 50% and at one point in time. I let it become a loser. Don't follow anything that I did on Fastly. I did it all wrong. You're going to sell it all. Don't sell half. That's what I did wrong. I sold half and forgot about the other half. You know what happens is when I sell half, I just get comfortable and I stop thinking about it because it's not as much money. And, you don't manage the position as well. And that's the problem with, lagging in and lagging out. And, I'm going to lag in. I'm going to buy 10% of what I want to buy. Well, then I stop paying attention to it to a certain extent. I guess if you're a long-term investor and you're like Kathy Wood, that works. But I mean, it's difficult because, here you are, you're trading full time, you got a long-term portfolio that you're trying to manage, you do some swings and you mix it all in there. And, the time frames sometimes cloud over each other to a certain extent. Like I've got my Bright trading account that I know I'm always day trading, but I'm doing the swing trading and I'm doing the long-term investing, and you're like, it kind of mixes itself in there a little bit there, and then you might have designated it swing, and then it's going up, and I don't know.
That's bad. Know your time frame, right?
No, but it's tough because I'm trading all time frames, so it'd be nice. So I trade as a day trader, and I'm like overnight. It's 24-hour trading period. But then I've got I like this setup on the chart, and I think this stock could go for a bit, and I'm trying to make like 10, 20, 30% on some stocks. And then other stocks, I'm like, I like this. I don't want to look at this ever again. I want to hold this forever, and it's tough. I mean, I think all traders.
I don't see how you do it, frankly. I don't see how you do it.
Well, how do you trade too, Joel? You trade both.
Yeah, but it's short term, in and out.
Joel trades like futures.
I get in, stopped out, momentum, in out. I mean, it's not. I mean, it's really tough to keep all those different time frames.
It's really tough.
And
when you take stocks through earnings, as a trader, you never take stocks through an earnings report. I would never intentionally, like sometimes you get stuck and sometimes, I'm like doing stuff and I'm like, I forget it trades earnings, I as a trader, but for the most part, if you're a technical trader and you're just trading technicals, you shouldn't be taking stocks through earnings. If you're an investor, you should absolutely be taking stocks through earnings.
Yep.
You've got to take them through because sometimes, those are the biggest moves you're going to get. So, I mean, that's just this environment. It's tricky and I've struggled with this for years, and it's a good topic for, another day because we're going to run out of time. Yeah. But just how to not let the time frames, all cluster together, figure out, what you're in, and, and I struggle with it too.
All right, I'm going to hop off here. I see a lot of people upset, subscribers, non-subscribers, that, we're not getting all the tickers between what we have.
Sorry,
and what you guys thought that we can't. But I'm going to hop over to premarketprep.com and try and cover all these crazy issues that you guys want. So, Spencer, I'll check in with you later. Everyone, have a good one.
Clearly, no one here. I'm the only person that knows what they're doing, obviously. All right, so everyone.
That's a 10-point trade, huh?
Yes,
that's solid. I just showed you how to lose 10 points in Fastly, Spencer. I'm down 10 points in Fastly today, so I'm taking the opposite side. I know I show you how to lose.
Okay, so here's the truth. Like, here's how I approach this very thing, right? And part of it is different accounts, but I know you have that too. Obviously, I have different accounts, and I genuinely don't think about them. Like, I have my my Fidelity account with my longer term stuff. That's where I've got like SoFi, I've got Airbnb, I've got all my ETFs, all that stuff. It's all in there, and I don't think about it. Like there's maybe one or two positions that I think about a little bit. Like, I think about the PSTH that kind of stinks and whatever. But like I don't think about this stuff. Like, whether I'm up or I'm down. I know that's easier said than done. But I know what is long term. I know I can take it. I don't know what these stocks are doing all of the time. I genuinely don't. Like sometimes I'll like pull up a chart of something that I own, and I'm like, oh, I am up or I'm down way more than I thought I was. Like, because I have no idea.
I have that too. I mean, and I have that too sometimes. Like, I'm not sitting there actively managing it too. Like, I don't look at Fastly for a few days, and and you've got in the long-term account.
I'm talking a few months.
Yeah, or a few months. Yeah, well, a few months,
okay?
Exactly.
Like, I'm here every day, but it doesn't mean I'm looking at all my stuff every day. I genuinely don't do that. I make a point not to do that, actually. So, sometimes I even forget what the tickers are. Honestly, I've got a couple ETFs, and I can't even remember what the tickers are. I got to go look it up.
So, I don't know. I've struggled with this with my trading for 21 years, separating investing from trading. Some parts of me thinks that I should just index on the long-term investing side.
You are already indexed, or you just want to.
I am indexed heavy.
Don't know it yet.
I am indexed heavy because I own so many stocks. Like, if I looked at my portfolio on any given day, market goes up 1%, my portfolio goes up a little bit less because I'm like dividend heavy, so I'm not as high of a beta. But market goes down 1%, my portfolio goes down a little bit less. So I kind of am like a value indexed fund because I'm big enough that, and I own like SPY, and I own like, ETFs as well. So, even though I lose 10 points in Fastly, what is it, like 1% of my portfolio probably? So, I mean, really in the big scheme of things, it sucks, but is my portfolio going to be red today? It might not even be red. So it might be up, because the market's up overall. So, part of me just thinks I should just index in the long term and then just swing trade and day trade. And don't take any of your swings through earnings reports, and don't take any of your day trades through earnings reports, and try to avoid the fundamentals and trade the charts and trade the technicals and trade your edges and just index on the long side and not worry about it. Some of me thinks I should just do that.
I want Peter's thoughts on this here, because Peter's, on the floor every day. He's trading every single day, but he's got his own long-term stuff too. And I want to know how. And
I have to go. I want to say hi to Peter for a minute.
Okay, well, here he is, Peter Tuchman. Good morning. We're talking about how you separate the long-term and stuff from the short-term stuff, and you obviously have long-term stuff, but you're at the same time you're trading every day for clients and things like that. So how do you separate the two and not screw yourself out of
trade out of all your long-term
positions?
It's so great to see you two guys, to listen to Dennis talk about what's up. Talk about just trading technicals, right? Because that was not always the way you were doing it. So it's great to hear that part, that how we are able to sort of curate our portfolio as things change, right? And so I was really excited to hear that's your thoughts going forward, just indexing it stuff too, because it's complicated. Look, I'll tell you one thing though, guys. This is a luxury problem in so many ways. It's why I've never invested in the stock market.
So you don't invest?
What?
You just trade?
I do not own stocks. I've never owned stocks. I've really, up until recently, I had some money that my dad gave me, which I put in a small thing, but I've never owned a share of stock in my life.
No, but you own like equity. You own like mutual funds.
I owned a share of stock in my life, Spencer. Okay.
So what do? You invest real estate? Where do you invest? Or you just keep your trading account?
You have to realize I have two children who I put through college. They graduated without not a penny of debt. I've been on Wall Street doing lots of different things. And so you have to realize too, that when I'm trading on the floor under my regulations for customers, hedge funds, prop shops, whatever I'm doing, I am not allowed to be in stocks that I'm in for a customer for at least 30 days. So historically, look, my career has had ebbs and flows and positive years and rough years and whatnot. But one of my goals was to let my kids graduate school
We got you. Oh, we just lost them.
Okay, good stuff.
We're good.
And so that's where, if you ever put two kids through private school in New York and college, you'll know where why I would probably have $1 million invested in the market that I don't. However, it's super. You know how the mind works and the paradox of looking at your portfolio and your P&L on a daily basis. You have to realize I trade the S&P, a model that I built with a couple other people around the 378 stocks that we trade on the floor of the NYSE every single day, right? So and I'm in and out of all of them on a daily basis. And I've done that literally this model since 2006. So therefore it would be, unless I was really had the money and was a long-term investor and put money aside, yes, probably I could do it and not touch it. But under the regulations as a trader on the floor,
Right.
That's super. And think about this too. If I was sitting there in this wild market, and money's a funny thing, how it plays with your mind. If I was sitting there and I'm playing a short-term trade for customers, if I had a position in my head that I was all focused on that was either going against me or going in my favor, and I was taking a position for the customers of my company, right? It would be like, oh no, I'm hoping I would get overrun by hope. I hope he doesn't sell too much. I hope he's not getting aggressive. I'm long the stock. So that conflict of interest was something that I put on the shelf decades ago. I said, you know what? I have a nice business. I make a good living trading for them. And if I'm going to be sitting there focused on my P&L, which can be the loudest voice in your head, right?
Yeah, for sure.
If I'm focused on that, you guys are different. So you're not doing what I'm doing. So you're able to do that. But if I'm sitting there worrying about my P&L when I'm actually trading for a customer, which is my fiduciary responsibility and my priority, then that conflict would drive me batch, excuse my language. So I decided, you know what, I'm going to set my priorities. The kids graduated both. My son works with me. He's my partner on the floor. He trades. He works with me. My daughter just graduated college. They have no debt. That's one of the most freeing things. And then when I trade clearly and I'm able to analyze the market for you guys and for me and for Wall Street Global Trading Academy and whatever, I do it with a pure motive, right? I have no other agenda except to figure out why shit moves the way it moves. It was a decision I made. There are people on the floor who do trade. They obviously are not allowed to buy and sell intraday around stocks that they're in for customers. That's always been our regulation. But for me, I like sort of that purity of thought. You know me, I'm more of like a forensic analyst than somebody who's going to pick stocks. So that's a luxury problem for me that I don't have to worry about what you guys are going through.
I wouldn't have thought that I extended though to like mutual funds. I guess it does.
You know what?
Well, I know CNBC. I think you can own mutual funds.
You can. There are probably nooks and crannies around it, but you know what? It's just life is complicated. A lot goes on. Okay. And so whether there were times where I had money or not, and I just decided where to put it, I realized there was clearly a wall of conflict between, because not everybody does what I do. You have to realize that a lot of people on the floor are trading individual stocks for customers. They get order flow. One day it's one stock, maybe it's a basket. But the model that I trade, which is literally the S&P 500, each individual stock. And then, I mean, we've talked about it a little bit, but we can go into it another time in more detail. I trade the basket of the S&P that trades in New York relative to market on close flow. So literally every day, every one of the stocks on the NYSE and the SPY, I'm in, whether it's 100 shares, 1,000 shares, or what. And so for me to start tracking what I'm in for them and what I'm in for me,
impossible.
Right.
It could only make me crazier, and I'm pretty shot to begin.
We're all crazy, Peter. Anyway, I gotta go. We're gonna let you run with Spencer here for a bit. I love seeing you, Peter. I always stay late for you. Love you. See you, man.
Yes, sir.
That was really good. I just learned a lot just then. I never realized. I had always just assumed incorrectly. It turns out that
it makes sense. Most
no,
do.
I mean obviously it makes sense. You can't be doing one thing for a client and then doing something else for yourself.
Money looks expense. Money's a funny thing that way. We're all that way. We're only human. And can you imagine if I was like apprehensive to take a position based on the information I have for a trader because I have a long-term position? I could just sort of say, oh, forget about it. But you know how that is. I'm watching. You're in your mind. You can see your P&L going, oh my God, why am I getting aggressive? So know what? It was a decision I made a long, long time ago. I said, I need some purity in what I do here, because that way I can actually, the market is so much bigger than all of us. Look at the moves that we're seeing, right? Look at Hood yesterday. I wanted to talk about this with you because I think it's sort of exciting. We've dabbled in it a little bit about the sort of the ADDness, the ADHDness of the market, how we saw yesterday, that sort of the herd mentality came back in with Hood, right? But it's funny how you've never seen this as, look, there have been times historically where people will sell one sector and get into another. Tech is overvalued. They're taking their profits there. We've seen that this year too. When NASDAQ got hit kind of hard, they were like selling the high performing tech ones and getting into the mid caps and small caps. So we see that kind of rotation, called rotation by the the people smarter than me in markets. But to see actually, like we saw yesterday, them sell all the meme stocks and going into Hood, right? How fascinating is that? It was almost like, the herd of a plane that's landing at gate 7, gate 8, gate 9 from that funny movie, Airplane. You literally, if you looked at the chart on GameStop, AMC, all the stocks that they were playing in the meme side, in a market that was, it was down 300, but that was not significant to the fact that some of these were down multiple percentages, but they were bailing on all those. It's like, and then everybody was in Hood, right? And so I don't think we've seen that before. Look, we've never seen the phenomenon of the meme stocks. We've never seen these 40 million new kids, people, whoever they are, trading the stock market like this. And it's like everybody, okay, let's go to Hood, right? And everyone is like selling this and going into the Hood. So I find that fascinating. It's look, I don't have an axe to grind against it, as I've said before. Anything that gets eyes on this market by young, new people involved in the market, for me, is the greatest thrill. But it's fascinating to see how when CNBC put up the chart of the other memes, they were all getting eviscerated and friggin' and Hood was.
We haven't even talked. We didn't even mention AMC this morning before you just brought it up. But AMC below 30. This morning, last night, it got to 28.50. This is AMC we're talking about. This thing was at 72. That was the high. So yeah, and obviously, like the concept of stocks ripping up 100%, 200% at the open is not a new thing. It happens all the time to penny stocks, biotechs, on drug news, whatever. But there's the more attention from retail brokers, thanks in part to AMC, GameStop, et cetera, and maybe that changes the dynamic of this whole thing. And so B, people, there's a difference between trading some penny stock that some company that no one's ever heard of, some biotech, whatever, and a brand that we've all heard of, like Robinhood and AMC and GameStop. So. For the people that are like, what are they talking about? There are 100, 200% movers every single day. It's been that way for forever. Yeah, but not to this extent, not to this widespread, not to the widespread nature that we've had it. Twitter helps with that. Reddit helps with that, right? To sort of fan Discord, they all just sort of fan the flames. It is definitely much easier to get a viral movement going on in stock now than it ever has been before. Whereas before, maybe you have only the hardcore traders buying today's penny stock of the day, right? Now it's just much easier to fan the flames. So
let's put pennies on the side for a second. It highlights though how dangerous these moves are.
Sure.
Because look, you talked about a penny stock. We'll get into it. There was some word around it, and it rallied. That's fine. Then you've had those stocks that made those the biotechs on news about FDA approval or this or that. That's where we saw that kind of other volatility. But this new phenomenon is new, right? There's no question about it. And when you have it, and we always talk about technical analysis, when you have stocks that are real companies, some of them coming out of bankruptcy or not, some of them have obviously been in play now for a year and change, make those moves, right, from 20 to 30 to 75 and back to 30, right? And people are getting their financial advice and trading advice from the internet. It leaves the zone to be a dangerous playing field. And so the moves are being made for no other reason than everyone's running into them and running out of them. And so what does that do? It's like, who gets the first phone call, right? It's like, oh yeah, the great steaks showed up at the butcher shop. Who's getting the first phone call? Who are you taking your advice from, right? Or whatever. I will mention it. I had a fascinating chat the other day. I was fortunate enough to get on the phone with Jamie Rogozinski, who was the founder.
He was on our Power Hour show on Thursday, I think, or Monday or Tuesday.
Correct.
Days ago.
He told me he had been on with you guys, but we reached out to each other and we spent a couple hours on the phone. First of all, it was an honor because he's the real deal, and what a groundbreaking legend. But it was fascinating to know how this whole thing started and what his feelings are about it now. And this phenomenon is here to stay, no question. But the playing field is not even, right? Especially when young people without are taking advice from people they think have their best interest involved and not. That move, and then let's add the other little sort of caveat to it, which is what I started the conversation about, that description when somebody picks a stock that's going to be the flavor of the day, and then they bail on everything else. In the old days, maybe Hood would be the flavor of the day, but it doesn't mean they're going to bail on all their positions on AMC, right? But what we're seeing is this whole generation is moving in concert with each other. And it's almost like ants going to a piece of food on the road, or the rats going after the pizza on the corner. It's like, guys, we're going, boom, get out of that and let's get into this. And as exciting that is, and I have nothing against it, I'm just saying from a technical point of view and from somebody who has experience trading this market. And as I always say, I want people to come to this party and be successful. I don't want people to be buying stuff at 30, watch it go to 70, listening to some schnutz who tells them it's going to the moon. And then suddenly the Hood becomes the story of the day, and they spend a month trying to get back to even, Spencer. There are people, look, we know that David Green, who trades live with you guys, he's now trading live on Twitch this morning. We just launched this thing. It's super fun. Anyone interested, go watch David trading live on Twitch. Talks about it that he has people come in who have no experience trading, who have bought some of these meme stocks way up high and don't know what to do with that position because they're 20, 30 bucks out of the money. And they're trying, and they don't have a lot of margin to play around it. And they're spending a month getting back to even when we're having these great days they could have been benefiting from. So I beg people to learn what you teach, we teach, technical analysis, Wall Street Global Trading Academy. Learn from people with experience. As I said, I don't own stocks, so I have no I'm not touting anything here, guys, except I want you all to be successful in this. And if you buy a stock, whether you're following the herd or not, and I'm not telling you, you got to listen to me, but if you buy something at 30 and it goes to 60, I beg you to take the money off the table. There will be another opportunity. And it's funny because opportunities come not necessarily if it goes down, but if a stock is going to forge higher for the right reasons, there will be another opportunity. So you can buy a stock at 30, sell it at 60, come in fresh and clean every morning. That's what day traders do, right? And whether it goes to 70 and you buy it again and you sell it at 90, you're still good. It doesn't have to come down. But in order to preserve your capital and your portfolio on a day-to-day basis, to be able to come into this market fresh, because as we know, every day there are opportunities. This is not the summer of love here. This is a wild, volatile summer with a lot going on. Every day we're seeing great, incredible opportunities and moves. For us, people who know technical analysis, volatility is a gift, right? I don't come in here all nervous. I come in excited, like, so where's the opportunity, right? And I don't like people throwing darts at a board just because. These moves are happening not for any other reason except everyone's jumping into them. They're not going up because of earnings. They're not going up because of anything except more buyers than sellers. This is an auction market. And when that happens and you're not the first one to get the phone call that the buyers have turned seller, well, you could end up holding the line and holding the bag. So I beg people to check that out.
Peter Tuchman. By the way, Peter, how was your surgery? You're all good on the shoulder front?
You know what? I had the surgery. It went well. It was successful. There was some stuff going on. I'm forging a road to recovery. Let's leave it at that.
Okay, good. Peter Tuchman, the Einstein of Wall Street Global Trading Academy, joins us every Thursday. Peter, thanks a lot as always. Feel better with the shoulder. And
if everyone gets a chance, go check out David trading live on Twitch. Wall Street Global Twitch. It's awesome. Thanks,
man. Thanks a lot, Peter. That man is a machine. Okay, here's what's going to happen right now. This show is going to end we're going to pivot over to live trading at the open. Myself, Mitch Hotch, Ryan Faluna, a few others. We've got a few guests joining us for the next hour and a half. And we'll just hang out, and maybe I'll make another Robinhood trade today, make $10 more. Probably not, but we'll see what happens. All right. Thanks to Marc Chaikin. Thanks to Peter for joining us today on this show. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Smash that like button, please, and thank you. So this stream is going to end, and we're going to go live here on the next stream in a couple of minutes. If not, maybe they're already live. They might already be live at this point. I don't even know. But I'll see you guys over there, live trading at the open. Good luck. Stay filled, stay green, all that good stuff. And I'll see you guys.